Hello, and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today is November 20th, 2025, and we are diving deep into the S&P 500 ETF, ticker SPY, at a pivotal moment for the market. The big story everyone is talking about is Nvidia, which just reported spectacular earnings and off-the-charts guidance, sending its stock soaring in after-hours trading. This has provided a much-needed boost to market sentiment, helping the S&P 500 snap a four-day losing streak yesterday. However, this optimism is clashing with very real fears of an AI bubble, a risk that 45% of fund managers now see as the biggest threat to the market. We've seen major players like Peter Thiel's hedge fund and SoftBank completely sell out of their Nvidia positions before this report, signaling significant skepticism at these high valuations. Adding to the uncertainty is the long-awaited September jobs report, which is due tomorrow, November 21st, after being delayed by a government shutdown. This report will be critical for the Federal Reserve's next move, with officials currently divided on whether any more rate cuts are needed this year. Meanwhile, broader economic signals are mixed, with consumer sentiment crashing to record lows and retailers like Home Depot and Target warning of a weak holiday season. So we have a classic tug-of-war, incredible strength in the AI sector versus widespread economic weakness and bubble fears. Let's turn to the charts to see how this battle is playing out in the price action of the SPY. Here on the daily chart, we can see the broader context of the market's journey over the past year. After a significant dip and bottoming process in early April, the SPY has been in a very strong and sustained uptrend. The market pushed to new all-time highs in late October and early November, peaking just under the $689 level. However, the last couple of weeks have been challenging. We can clearly see the four consecutive red candles from last week, representing the losing streak that was driven by those growing AI bubble concerns and pre-earnings jitters. This pullback found its footing right around the $660 level, which acted as a crucial area of support. Yesterday's green candle shows a decisive bounce off that support, closing at $662.63, a move likely fueled by anticipation of good news from Nvidia. This $660 level is now the immediate floor for traders to watch. To understand just how volatile this market can be, let's zoom into a key period from earlier this year. If we isolate the price action from early April, you can see a dramatic story unfold. On April 3rd and 4th, the market experienced a massive sell-off, with SPY plummeting from around $545 down to a low of $505 in just 2 days. Volume was enormous on this move down, indicating panic selling. But what happened next is a textbook example of a V-shaped recovery. The market bottomed just above $481 on April 7th and then staged an incredible rally, culminating in an over 11% gain on April 9th alone. This demonstrates how quickly sentiment can shift and that buying the dip has been a winning strategy in this bull market. Now let's switch to a shorter time frame to analyze the most recent price action in more detail. Switching to the 1-hour chart, we get a clearer picture of the recent slide and rebound. From the peak on November 12th around $685, the SPY entered a steep channel downwards. The selling was methodical, with lower highs and lower lows over 4 straight days. The descent accelerated on November 18th, where we broke below $662 and quickly tested that key $660 level before finding buyers. Yesterday, on November 19th, we saw a gap up at the open, and the price managed to hold its ground throughout the day, building a base of support above $660. This basing action was crucial, setting the stage for a potential reversal. The market was clearly waiting for a catalyst, and Nvidia's earnings after the bell provided just that. The key short-term resistance to watch now is the breakdown level from November 18th, right around $665. Reclaiming that would be a very bullish short-term signal. Let's zoom in even further to the 15-minute chart for the latest action. On the 15-minute chart, we can see the minute-by-minute battle from yesterday. The market chopped around for most of the session, holding a range between roughly $659 and $665. The volume was relatively light, suggesting traders were on the sidelines ahead of the big news. In the final hours, there was a surge of buying that pushed the SPY to close near the highs of the day at $662.63. This preemptive buying was a sign of bullish positioning into the Nvidia print. Post-market, futures have rallied significantly, so we can expect a gap up at the open today, likely above that initial $665 resistance level. The question now is whether this gap will be sustained or if sellers will use the strength to take profits. The first hour of trading today will be very telling. So let's put it all together and go back to our daily chart. We have a strong fundamental catalyst from Nvidia clashing with bearish macroeconomic concerns. The chart is showing a successful defense of a key support level, which is a technically bullish sign. The bullish case is that Nvidia's results are so strong they pull the entire market higher, invalidating the bubble fears for now. If the jobs report tomorrow comes in soft, it will reinforce hopes for Fed rate cuts, adding more fuel to the fire. In this scenario, a break above $665 could lead to a quick test of the $670 to $672 range, and then a move back toward the all-time highs near $688. The bearish case is that this is a sell the news event. Investors might use this post-earnings strength to take profits, especially given the high valuations and weak consumer data. If tomorrow's jobs report is much hotter than expected, it could reignite inflation fears and slam the brakes on any rally. A failure to hold today's opening gap and a break back below $660 would open the door to a retest of the recent lows and potentially the $653 level from late October. To recap, here are the key levels and potential outcomes. Critical support is at $660, a break below that would be a significant victory for the bears. Minor resistance sits at $665, with major resistance at the $670 to $672 zone, and then the all-time high around $688. I would place a 60% probability on the bullish scenario, where the market digests the Nvidia news positively and, assuming the jobs report is not a disaster, grinds higher to test the $670 level. This likelihood increases if we see a strong, high-volume close above $665 today. I'd assign a 40% probability to the bearish case, where we see a gap and fade, with profit-taking dominating. This becomes more likely if the jobs report tomorrow is surprisingly strong, forcing the market to reprice Fed expectations. The main thing to watch is tomorrow's jobs report at 8:30 a.m. Eastern Time. The market's reaction to that data will likely set the tone for the rest of the week and possibly the rest of the year. That's all for today's analysis. Please remember, this is for informational purposes only and is not financial advice. You should always conduct your own research and due diligence before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you next time.